Good day everyone, Ali is here from Safi Financial Network. Today is May 1st, 2022. We are going to have a weekly analysis for US market indexes. And last month we have very brutal and hectic months for all the investors and traders. I'm sure that they went through lots of pain just because April, as you see here, here's the monthly chart. April was a very bloody month since 2000, I believe 2017 or 2007 or so. That's what they're saying. April was the most bearish month in the history of the stock market. So again, there are some exceptions that people think April is going to be positive, as I thought at the beginning of this month, just because April has a good history for itself in the stock market history. But you see, it turns the other way and it goes back down all the way to test this SMA 20 on the monthly chart, and just we close touch below this, which is 41.30. That's going to be a level that we just close below this, and this is bearish. This is quite bearish. This is not bullish at all. And as far as we are consolidating above this moving average is not going to play out at all, so it's going to go down probably. That's what I'm thinking. This is the major trend line that I see for the next support, or probably the next reaction for the monthly chart for S&P 500, which is going to be around 4,000. So if we take out this 4,000 with another monthly chart, probably we are going down more to 38 to 38 to 3,700, the first stop, and then it's going back down all the way to 32 to 3,500, which is far away from now, but this is the level that we're gonna watch. Are we going to forecast? No, for sure we are not going to forecast, but this is the level that we need to watch. If one takes another one, so we should be careful, just because this one can break down more to 37 and 3,800. But I myself, this is my idea. Lots of times actually my idea gets wrong, but this is what I see as a very substantial support, or probably turning point for the stock market. Probably the month of May would be negative, especially with today's market condition. Sentiment is very bearish and negative. So when we have oversold sentiment, there is going to be a bounce, and that bounce would be very tradable bounce, and would be very solid. I'm not sure if that is going to be just a bounce, or it could be the reversal for the market. I'm not gonna speculate that one, but I would say because of the oversold condition in monthly, weekly, daily chart, a bounce is coming, and that bounce would be very solid, and lots of gain. Lots of traders and investors can gain from that bounce, which gives lots of people to rebalance their portfolio, or probably to hedge themselves, or probably to just think about themselves, how they're gonna manage and how they're gonna risk moving forward for the next years or for the next months. So we are not there yet. We have quite a time to get to that level. I think that's going to be level 3,800 to 3,900. The most important level based on the monthly chart, I would say, is 39.67. So 39.67 would be a very turning point for the market. So market needs to decide which way they want to go. They want to go down, further down, and just starting very nice spiking down to the bear market, or it wants to have a reversal back up to going V-shaped recovery, probably, I'm not sure, or U-shaped recovery, or any kind of recovery you can guess, but it could be a recovery going to new all-time high. But this is basically very sharp sell-off, like 4 consecutive months down the road for the stock market. We can see very important, just because we had 4 consecutive down month for a stock market. I know lots of people are saying here's the uptick. Yes, here's the uptick, but overall it is down. Do we have any 5 consecutive month in a row for stock market going down in the history? Yes. Do we have 6? Yes. Do we have 7? No. We haven't seen 7 consecutive months in the stock market going down in a row. So I would say since beginning of this year, which is January, we are almost around 20% correction if we just want to make it accurate. So we can just put it there. Right now till now we are 15% down, and probably we are going to see, I would say, another 5% or 10%. So we ended up to probably 17 to 18%, maximum 20%. So that's what I see for monthly chart. We can go down, yes, sure, we can go, but this is the ultimate target, downside target, as I'm just saying for now. If we hold this area coming back up, that would be end of the correction, and probably, and for now, but this if this continues, downside continues to go further and further, we are going to see at the beginning of the bear market. So we are at the beginning of the bear market, and that bear market just initiate January 2022. All right. So this is the monthly chart. Let's go to the weekly chart. Weekly chart shows me a closer bottom here. Just to zoom in here. So as you see here, 41.25, that was the level that I mentioned. Just market touched and rebounded back up. So right now we are just a touch above it. We are at 41.32. This is future market. And the next important level is going to be this one. So if you just zoom out, here's the top in 2018, here's the top 2020, and if you connect these two tops together, stretch this line, you will see here's the rejection, here's consolidation, going back up, back test, and here we are getting close to this one. So that is going to be a very important level for a market based on weekly chart. Again, I'm not thinking this one is going to hold. Probably we are going down to 3,900 or even 3,800. I'm not sure, to this wide range bar. That would be a solid area for support based on the monthly chart as well. So 38 to 3,900 would be a very good level for stock market if we take out this important area. All right, let's go to daily chart. Here is the daily chart for S&P 500, and as you see here again, so we are in clear downtrend. This is a downtrend. We are in clear downtrend, and the next one is going to be 4,000 to 4,030, which is this level. Just give me a second. I'm going to show you here exactly. So this is the level that I'm thinking, which is going to be another 5% down. 5% down for the market. So 4,000 to 4,003, that would be a level. Sorry, not 4,000. It's going to be 2-3% down. But here is the level that I was pointing out, even in monthly chart as well. So 38.25 to 39. So let's keep it in a yellow, that we can just. So I would say this area 38.25 to 3,900 would be a very solid area for stock market if it wants to have a bounce, a solid bounce, and probably that solid bounce goes all the way up to 4,400. That's what I'm saying. So that's what I'm saying. It is solid bounce. So probably everyone is getting bullish as well at that time. So we should see. We are going day by day and week by week to analyze the market. We are not forecasting. We are just seeing the level of the trade and the level that we can see how we can position ourselves. I want to say, if this is going to be the end of the correction, that would be very nice opportunity, and probably not a lifetime, but it could be one of those levels that everyone can get a stock, just because that's going to be washout low. that's going to be capitulation. Lots of people are panicking and they're going to sell their stocks, but that is going to be a level that probably Federal Reserve is coming back to support the market. I don't know what type of news is coming, but that level is going to be very, very important. That's what I'm saying. If we break down, we are going to see a major bear market, major bear market. Probably a year or two is going to last, so we will have lots of time to average down in that bear market. But for now, I would say another 3 to 5% correction, and that ended up to 20% correction for S&P 500. That is the bottom line for this correction probably this year. All right, so going to NASDAQ, let's go to NASDAQ, because NASDAQ has a worse situation among the other stocks. It's kind of like competing with Russell 2000 as well. So here's the monthly chart for NASDAQ, and as you see here, monthly chart, we are getting close to this arrow. So if we break through this arrow, we are coming back to this consolidation area, which is very, very strong area. 10,000 to 12,000 area, that would be very, very strong area for NASDAQ. And I believe 11,500, that's going to be a level probably middle of this consolidation. You see this flip-flop consolidation and then another rally. So probably that's going to be a level for stopping the downtrend for NASDAQ. But NASDAQ has very, very bad month, a very ugly month. And as you see here, this line breakthrough, so we're gonna clean this one up. So still we are above this uptrend, but this can just take out in blink of an eye. So that would be very, very interesting if you see this one breakthrough coming down, going to this consolidation. Probably lots of stocks like Apple, Microsoft, Amazon, Nvidia, and those stocks are getting to the downside as well. And lots of people are getting a margin call or in a panic mode as well. So with this downdraft, just watch out your technology stocks as well, just because this is NASDAQ and this is going to be a sharp one. However, this week, let's go to weekly chart. This week, I'm expecting this is going to be a solid bottom for the NASDAQ for now, just because if we again take out this pivot, so we are going down to this 11,000 area, and this 11,000 area, let's just put a Fibonacci here, which is from the March low to here. This one is coming to a 50% Fibonacci, which is pretty solid one. Right now we are at 38% Fibonacci, so that's why NASDAQ is kind of like reacting to this one. Also, this one is coming through with this trend line. You see this trend line. And these ones are very, very important. Let's clean this because this one doesn't play out anymore. So when we break down, it's gonna go down all the way to this consolidation. This consolidation is very, very important as per monthly chart. This is weekly chart, and this one is coming 50% Fibonacci from COVID crash to all the way up to all-time high. So 50%, that is going to be a massive for NASDAQ, as you see here. Okay, so going back to a daily chart, here's the daily chart. Let me clean this Fibonacci just because we don't need this one, we don't need this one, and we don't need this one as well. So right now we are in a clear downtrend. Okay, we take out this pivot low, and we are just mumbling and humbling around this pivot. But this one again can go down because we are going back there in this breakout consolidation. That was, I remember, that was a very, very hard time for investors and traders as well. It was for February, it was February, March last year. So everyone thought that, okay, we are going back to the bear market from there, just because technology had a hard time. If you remember last year, springtime, technology had a hard time. And here is the May market went up to hit the all-time high again, and then coming back down sharply to test this bull flag. You see this bull flag? This is pretty nice bull flag. However, we are going back down here to test this level. Whenever we are hitting this pivot or this area, this demand area, so as much as we test this area, we kind of just this area is getting weak. So the more test, the weaker this area would be. And I think it's gonna just break down just because the other supports as well. So as you see here, we are testing this area as well, and then finally break through. It doesn't trigger this reverse head and shoulder, doesn't trigger at all, so it just reversed back down. And when this reverse head and shoulder triggers back down, so this pattern fail. When this pattern fail, basically it's going to go down more to the downside, and that's why I'm saying be careful with Amazon, Google, just because they are probably going down another 10 to 15% to just resettle with another pivot or another strong support area. Okay, let's go to US 30, which is Dow Jones. And Dow Jones, as you see here, this is daily chart for Dow Jones, and interestingly, Dow Jones doesn't go down like the other indexes. Why? Because Dow Jones is fully weighted with lots of dividend stocks, lots of stocks that are in financial, that are in energy, commodity stocks, and they are doing well. They are not doing bad at all, so they are doing well. Because as you see, energy stocks are going up just because oil prices are going up as well. So energy stocks are going up. Banks, financials had not, well, they didn't have a good time in the months of April and in months of March, but they played better compared to the other technology stocks or the other communication stocks, right? So they played better, but as you know, they're hitting hard as well. Like at Goldman Sachs is coming down, Bank of America recently coming down, JP Morgan is coming down, and it's getting interesting and tempting, to be honest. I told my subscribers, but they played better than the other technology stocks. So that's why Dow Jones didn't go down like the other indexes. Here is the level for Dow Jones: 32,000 to 32,699, which is 7,000. 32,700 would be very, very interesting level for Dow Jones, because if this one take out, which as you see here, here's the high, here's the low, and here is lower high. So we are seeing a kind of classic bear market in Dow Jones, right? So if you are seeing lower low, that's not going to be here or here. That's going to be here probably. And price is coming back down. What does it mean? It means probably the oil price is coming down as well. And I don't know what would be the catalyst, but if the oil price is coming down, energy stocks are coming down as well. So Dow Jones will get more hit compared to the other indexes, right? Okay, next stop is going to be Russell 2000. Okay, Russell 2000, this one is coming down, take out this pivot, and right now we are at I would say a dramatic move for the Russell, because Russell can go down all the way to 1691 to 1750. So I would say Russell 2000 is kind of poised to coming down to this level. And this consolidation is kind of like a wave 4. So if you just see this one as a wave 1, wave 2, wave 3, wave 4, a very, very complex correction. And this one is wave 5. And this wave 5 can go all the way down to here. And this is in clear downtrend as well. So if you see here, Russell, even if you don't know Elliott waves, Russell is giving us a sell signal prior other indexes. This is very interesting. So this is an amazing bull trap, because this multi-month consolidation breakthrough to the upside, but reverse back down fails, and this monthly consolidation fails, you see. So when this monthly consolidation fails, this one is coming down with sharp sell-off, month of January, bear flag, and then coming down, and probably we are going down, as I said, to 16 to 1800, which is going to be based on this on monthly chart. We are going down to let's just zoom in here to here. This is my Fibonacci, and here is a March low. So right now 1710, the one that I said, which is going to be a very nice area. This is 50% Fibonacci. This selling, this top of this selling, this top of this selling. You see, this is the resistance here, and here is the 50 SMA on the monthly chart, and this is 50% Fibonacci as well. So that's what I'm saying. Russell can go down all the way to here, and this is a wide range bar, and that could be a good area for fulfill the downside target as well. Russell 2000, interestingly, this one is coming down again, stochastic, which is our momentum indicator. Let's change it to the momentum indicator, by the way. All right, so since 2000, this is 16, and since 2016 we haven't seen this bearish sentiment at all in Russell 2000. That is very interesting, right? And this could be a very bottoming form. If the bottom forms here, that could be very nice signal, because that could be multi months low for Russell. But I'm not sure if this is it. Again, I'm not into Russell 2000. I'm just seeing as a leading indicator, just because this one topped out prior the other indexes, and probably that's going to be bottom prior the other indexes as well. All right. Okay, so I just leave it for now, and we will come back again with charts. And just be careful on this week. This week we will have, again, earnings are coming. We had a brutal earning from Amazon. We had good earning from Microsoft and Apple, but it didn't work out just because the other indexes went down and pulled the other stocks down as well. So that's why we need to be careful. Lots of earnings coming this week as well. So market volatility again is going to be picked in this week, and probably this week is going to be last week for this bear trend. We are going to see a solid bounce. I would say we are going to see a solid bounce probably in the whole entire month of May. And I'm not sure, again, that is going to be a bounce for the end of the correction, or it's just going to be a bounce. But we will give you an update every week. Please follow us. Please, just if you have any question, go to the chat box down there and put your questions down there. If you like this video, please smash the like button, and also share this video with your friends as well. So if you like this, if you think that the values or materials inside this video is going to be valuable for you or your friends, please just share it with the others as well. Have a wonderful weekend. See you on the chart. Bye bye.